For every trader posting their flashy profits, there are 10 more hiding from debt collectors. That's the truth nobody wants to admit. Social media has turned trading into a highlight reel. The winning trades, the fast cars, the fake smiles. But here's what they don't show you. The overdraft notices piling up in their inbox, the calls from creditors, the nights staring at the ceiling, wondering how they'll pay rent because the can't-miss setup missed. Debt in trading is like a shadow. It follows quietly, but it's always there. And the worst part? Most traders won't talk about it. Not in group chats, not on forums, not even with their closest friends. Because debt feels like failure, it feels like weakness. And in an industry built on confidence, nobody wants to admit they're sinking. So instead, traders put on a mask. They smile at the charts. They post screenshots of their rare wins while hiding the long trail of losses. They pretend to be in control, even when their finances are bleeding out behind the scenes. That silence? That's what traps them. Because if nobody's talking about it, then everyone thinks they're alone in the struggle. But let me say it clearly, you are not alone. Debt is far more common in trading than profit. For every six-figure profit post you scroll past, there are dozens of traders quietly leveraging credit cards, personal loans, even borrowed money from friends and family, just to keep chasing the dream. This is the dark side of trading that nobody shows you. And unless we drag it into the light, it will keep eating traders alive. Financially, mentally, emotionally. Because trading debt isn't just about owing money. It's about the shame, the stress, and the silence that comes with it. And that silence, that's the real killer. So why do so many traders end up in debt? It doesn't happen overnight. It's a slow burn, one bad habit piled on another until the weight is too heavy to carry. Let's break down the real reasons. 1. Over-leveraging. Leverage is like gasoline. Used carefully, it can make a small fire burn brighter. Used recklessly, it burns the entire house down. Most traders don't just dip into leverage. They drown in it. They see a $500 account and think, if I use 1:100 leverage, I can flip this into 50 grand in a few months. What actually happens? They blow it up in days. And instead of walking away, they top up again. More deposits, more leverage, more losses, until the account isn't the only thing in the red. Their bank balance is too. 2. Chasing losses. One of the oldest traps in the trading book, revenge trading. You lose a trade, so you double the size on the next one. Lose again, double it again. Before long, you're not trading anymore. You're gambling with borrowed money, telling yourself, just one more win, and I'll fix everything. That one more win almost never comes. What comes instead is a mountain of debt, built trade by trade, fueled by stubbornness. 3. Trading on borrowed money. Here's where things get really dangerous. Some traders don't even use their own cash. They fund their trading accounts with credit cards, loans, or borrowed money from family and friends. At first, it feels smart. If I can make 20% on this loan, I'll pay it back and keep the profit. But the market doesn't care about your repayment plan. It doesn't care about your deadlines. When those trades go south, the debt doesn't disappear. The phone calls don't stop. The repayment date doesn't move. Suddenly, trading isn't about strategy anymore, it's about survival. 4. Lifestyle pressure. The trading industry is soaked in flex culture. Everyone wants to look successful before they are successful. New traders see the cars, the watches, the vacations, and think they need to keep up. So they force trades to make quick profits. They withdraw money too early. They over-risk to fund a lifestyle that isn't real. And when the trades don't deliver, they reach for credit to keep the show going. Because in their minds, admitting they're broke is worse than actually being broke. 5. Lack of financial literacy. This might be the saddest reason of all. Many traders know how to read charts but have no clue how to manage money. They can break down a candlestick pattern, but they don't understand budgeting, compounding, or debt repayment. They treat trading as a lottery ticket instead of a business. And when you run a business without financial literacy, bankruptcy isn't a possibility. It's inevitable. All of these roads, over-leveraging, chasing losses, credit card trading, lifestyle pressure, poor money management, lead to the same destination, debt. But it's not just the financial cost that destroys traders. It's what comes next, the mental trap. Because once debt shows up, it doesn't just take your money. It takes your peace of mind. Here's the truth. Debt doesn't just hit your wallet. It hits your mind. And once your psychology is compromised, every trade you take is already poisoned. 1. Overconfidence after small wins. It usually starts with a lucky streak. A few green trades in a row, and suddenly you feel untouchable. You convince yourself you've cracked the code, that you can scale up aggressively and still win. So you take bigger positions, push leverage to the max, and start trading like the money is guaranteed. But markets don't reward arrogance. They punish it. One bad day wipes out weeks of progress, and because you were overconfident, you were also overexposed. Now you're in the hole. 2. The gambler's fallacy. Debt feeds on false hope. A trader loses 5 trades in a row and tells themselves, the next one has to be a winner. But the market doesn't work like flipping a coin. Every trade is independent. Yet this belief that a win is due pushes traders to bet more, risk more, and dig the hole deeper. By the time they realize it, they've gone from small red numbers to calls from the bank. 3. Addiction to risk. Let's be honest. For some traders, it's not even about the money anymore. It's the rush, the adrenaline, the dopamine hit of seeing a trade spike into profit, even if only for a moment. That rush becomes addictive. And like any addiction, it demands more. Bigger positions, faster trades, higher leverage. Until the account is gone, the savings are gone, and the debt remains. 4. Social media comparison. This one is deadly. You're sitting at your desk grinding small profits, and then you scroll. Suddenly, you're staring at screenshots of traders making $5,000 before breakfast. You don't know if it's real. You don't know if they blew the account right after. But it doesn't matter, your brain tells you you're behind. So you start forcing trades, scaling too quickly, and chasing a lifestyle that isn't even real. The more you compare, the more reckless you become. And reckless trading is the fastest path into debt. 5. Shame and silence. And here's the cruelest trap of all, shame. Once a trader falls into debt, they feel embarrassed. They stop talking about it. They isolate themselves. And isolation is dangerous because it keeps them stuck in the cycle. They don't ask for help. They don't admit they're struggling. They just keep chasing trades, hoping one big win will fix everything. But silence never fixes debt. It only makes it grow in the dark. When you put all of this together, debt in trading isn't just a financial problem, it's a psychological war. The numbers on the screen aren't just numbers. They're a reflection of your mindset, your discipline, your emotions. And when those are broken, no strategy in the world can save you. Debt doesn't stay in the trading account. It spills out, like water leaking from a cracked pipe, flooding every part of your life. It starts with the account. You're trading money you can't afford to lose, and when you blow it, you reload. You keep depositing, chasing, hoping. Soon, it's not just the account balance dropping. It's your bank account, your credit card, your savings. Then it hits the bills. Rent, electricity, phone plans, all of a sudden, they're piling up because the money you should have used to pay them went into a losing position. You tell yourself, I'll cover it with my next win. But that win doesn't come. And now the bills don't just sit there quietly. They grow with interest, late fees, and penalties. From there, it spreads into your relationships. Your spouse, your partner, your family, they start noticing the stress. You're short-tempered, distracted, defensive. Maybe you borrowed from them, promising to pay it back once trading takes off. But instead of repayment, all they get is excuses. Trust erodes. Relationships crack. Some even break completely under the pressure. Then comes the mental toll. Debt isn't just numbers on a screen. It's a weight on your chest. Every morning you wake up with anxiety. Every night you go to bed replaying your mistakes. Some traders even lose sleep entirely, staring at charts until 3 a.m., desperate to find a setup that could save them. Instead, they wake up more tired, more reckless, and more likely to lose again. It's a vicious cycle. Bad trades create debt, and debt creates worse trades. Finally, debt crushes your future. The longer you carry it, the smaller your options become. You can't save, can't invest properly, can't take risks that matter in life. You're not trading for opportunity anymore, you're trading for survival. And survival mode is the enemy of good decision-making. That's the domino effect. One bad habit at the screen grows into financial strain, broken trust, sleepless nights, and lost opportunities. Trading debt doesn't just empty your pockets. It empties your life. And here's the brutal truth. Most traders don't realize how bad it's gotten until it's already too late. They thought they were just in a little drawdown. But by the time the dominoes stop falling, they're left standing in the ruins of finances, relationships, and mental health. Here's the hard truth. You cannot trade your way out of debt. That's the lie that traps traders the longest. They keep thinking, if I just hit one big win, I'll pay it all back and finally start fresh. But debt and desperation make you trade worse, not better. And worse trading only digs the hole deeper. So how do you get out? Step 1. Stop trading with borrowed money. Trading should be done with risk capital, money you can afford to lose without it affecting your rent, your bills, your life. If you're trading on credit cards, loans, or borrowed money from friends, you're already set up for disaster. The very first step is cutting that cord. Step 2. Step back and stabilize. Sometimes the best trade you can take is no trade at all. If you're deep in debt, it's not the time to risk more. It's the time to step back, stabilize your finances, and focus on rebuilding your foundation. That might mean picking up extra income streams, tightening your budget, or pausing trading entirely until you're on stable ground. Step 3. Build a repayment plan. Debt doesn't disappear on its own. Ignoring it won't make the calls stop. Create a realistic repayment plan. List out your debts, prioritize the ones with the highest interest, and start chipping away. Progress might feel slow, but every payment is a step toward freedom. Step 4. Reframe your mindset. This one is key. Stop looking at debt as a personal failure. Debt is a teacher, a brutal one, yes, but a teacher nonetheless. It shows you what happens when you mix ego with money, when you gamble instead of manage, when you chase shortcuts instead of building discipline. Learn from it so you never repeat it. Step 5. Return with rules. Once you've regained stability, you can return to trading, but only with strict rules. Never trade more than you can afford to lose. Never risk money that's meant for life expenses. Journal every trade. Focus on growth, not gambling. Treat trading like a business, not a lottery ticket. Because here's the truth. Trading itself isn't the enemy. Debt is the enemy. And debt only thrives when you let pride and secrecy drive your decisions. When you replace that pride with discipline, when you replace secrecy with accountability, trading can go back to what it was meant to be, a tool for freedom. Trading was supposed to be about freedom. Freedom of time, freedom of money, freedom of choice. But for too many, it's become the exact opposite. Chains of debt, sleepless nights, and a future shrinking instead of expanding. And here's what makes it worse. Nobody talks about it. The trading world is full of noise about profits, wins, and lifestyles, but silent about the losses, the debt, the despair. That silence is deadly. Because when you think you're the only one struggling, you keep hiding. You keep chasing. You keep sinking. But you are not the only one. Debt is not rare in trading. It's common. The difference between traders who stay stuck in it and those who rise out of it is simple. Honesty. Owning the mistake. Taking responsibility. Refusing to keep digging the hole deeper. Here's the truth I want you to walk away with. You cannot borrow your way to financial freedom. You cannot gamble your way into stability. And you cannot trade your way out of debt. But you can rebuild. You can step back, reset, and return with discipline. You can trade from a place of strength instead of desperation. And when you do, trading can go back to being what it was always meant to be, a path forward, not a trap. So, If you're in debt right now, hear me clearly. This doesn't make you a failure. It makes you human. But staying in denial, that's the real failure. Don't let debt define your trading story. Let it refine it. Because the market will always be here tomorrow. The real question is, will you be ready to face it with clarity? Or will you keep letting debt control the way you trade today? The choice is yours.